This is A Better Way Financial, the podcast with financial advisors and father-son team Frank and Frankie Guida.
And I'm Heather Branch here with Frank and Frankie talking about their ideas on the things you can be working on now to better prepare for your financial future. ABetterWayFinancial.com is where you can start your conversation with Frank and Frankie and the entire team. You can also find links posted in the show notes. If it's more convenient, just click there or again, visit us anytime at ABetterWayFinancial.com. Guys, let's talk about taxes because, I mean, you say taxes and you ask anybody in the room, you think you got your taxes figured out? You might get like some people saying, yeah, but then if you really get into it, I mean, the thousands of pages that is the tax code make any of us go cross-eyed. And
start scratching your head.
I know,
like,
right?
What's going on with this?
I almost failed accounting in college. Don't even get me started on where I'm at today. Here is a video from the personal finance channel Income Parent on the subject.
We're taxed on money when we receive it, when we spend it, when we keep it, when we invest it, and even when we die with it. Hold that thought. Our federal tax code is 2,600 pages, 400 pages longer than the unabridged version of the Webster Dictionary. But if you read that tax law cover to cover and you did your taxes solely based on that, you'd probably go to jail. Why? Because that does not include the over 9,000 pages of additional IRS regulations that were never passed into law, but rather written by some bureaucrat sitting in his office that we still have to abide by. Congress never passed that.
Wow. I am not feeling any better about this subject based on what he was saying, guys.
Gives all new meaning to, I think I've already paid my fair share.
Yes, to say the very least.
So still going to jail after reading the 2,600 pages of tax code. That's a tough one.
No wonder so many of us are stressed out about taxes and trying to get it right. Listen, he is making a pretty good case on why tax planning, especially for our retirement, is not a DIY project. So how do you help to make it easier for folks in your office?
Well, we help because not only do you have to deal with these 2,600 pages, the 9,000 pages of amendments, but now you also have somebody who's able to help you with it. You know, if you're a DIY person, if you've been doing all your own investment, all your own taxes, all your own everything, it's tough to do that all on your own and not make any mistakes and not miss anything, you know.
So and to have the software to back it up, you know. You can't figure this stuff out with a calculator. You know, you can't sit there and say, you could say, I guess I'll do Roth conversions up to a certain amount or whatever. You know, you don't know that you're going to be accurate unless you actually run the software to do it.
Got it.
And it's not something you could just put on an Excel spreadsheet either.
Right. Well, with 2,600 pages of the tax code, I have to imagine we need more than an Excel document and a calculator.
Yeah, it's more robust. You have to factor in, what does inflation look like? What do the tax brackets look like for this year? What are they going to change to in 2026? How much am I going to get for my Social Security? If I have pension options, how does that factor in? Where am I going to get my income from? There's so much that goes into planning for taxes.
And there's multiple ways in which you can save money on taxes. And we go through those ways with folks and we show them in their particular case. Once we've analyzed what they're doing, once we've analyzed their investments, we can tell them, hey, you know, this is your situation. If you do this, and this, you're going to save so much money in taxes. And we can tell them what it is, you know. And there's, you know, the different things that, what are we looking at? We're looking at capital gains. You know, we're showing people, look, you've got this income that's coming to you, ordinary income. Well, why not have that income coming to you from capital gains?
Right.
And pay significantly less in taxes.
Yeah, you have all that money in your bank account in those CDs, and now you're paying ordinary income. Yes, you're getting 5%, but after taxes, you're only getting really like 3.5%.
We had a prospect come in, okay? Great couple. And they had this financial advisor, and they told us that they had needed some money.
Yeah.
And they had invested with this investment advisor. They had non-qualified funds, meaning funds that, you know, they had already paid the taxes on.
Okay.
They had IRA money, and they had Roth money. And they said, hey, you know what? We need some money because we've got to do the roof. Or I forgot exactly what it was. I think it was a roof or something.
Got it.
It was something like $40,000, $50,000. Can you send us some money?
Yeah.
Where do you think he sent it from?
Tell me.
He sent it from their Roth. which was the worst place he could have sent it from tax-wise.
And why is that? Explain why that is.
Because he figured, oh, well, I'll send it to you from this and you won't pay taxes on it.
Okay.
The problem with that is the Roth money is what you want to use last. You want to use your non-qualified funds first. So you're going to pay, you're taking up that money that's already been paid taxes on. And then you use your IRA money, but you let your Roth money grow as long as you can, because it's all growing tax-free, and it's going to create the largest amount of tax-free income later in your life.
That's one of my favorite financial lessons I've learned in these conversations with you guys. The idea of that not only have you paid the taxes already on the money you put in, but the growth. You also, it's tax-free on that growth. And that's such an important fact for people to know.
Absolutely. And if you're retiring over a 20 to 30 year period, that's a lot of growth that you can get growing for you tax-free.
Yeah.
So it can make a huge difference over the course of your retirement. And that's why we're running the analysis for folks. We're able to show them, here's what your tax picture looks like. You don't have a plan for taxes right now. It's just pretty much pay them in April. We want to show you how to minimize those taxes over the course of your lifetime. And that's exactly what we do. And if you're a do-it-yourself person, you've been doing your investment, odds are you probably have done a great job saving and investing to this point. That maybe you're looking to retire. Maybe you don't want to do this 2 to 3 hours a day every single day. Maybe you actually want to enjoy your retirement, spend the time doing the things that you want to do. And that's where we come in all the time for our clients. We have lots of people who used to do the investments themselves, and now we partner together as a team to help you through your retirement. Now you have an extra set of eyes. Here's what we can do to plan for our taxes in retirement. So recently we had a couple come in. He was 67 years old. He was retired. She was younger than him. She was 58, and she was still working. She had planned probably that she had to work until age 65. We wanted to see if she could retire sooner because she wanted to join them.
You know what it is? I mean, these wonderful people, they had 3 kids and 4 grandchildren. Now, you think about that. There was 9 years difference between the two of them. He was 9 years older than her, and he was already retired. And she was thinking she had to keep working. But, he's 9 years older. And women generally live longer than men, too. So how much time is it,
Well, time is precious in this situation in particular.
How much time do they really have left together? Yeah. And each day that she works is less time that they can, spend together with those grandchildren. And that was their love. That was what they wanted to do. Sure. They wanted to enjoy their time with their grandchildren. They wanted to travel together. They wanted to enjoy their time as a family.
Yeah, and they did a great job saving. They saved about $2 million for their retirement. They were looking to live off of about $80,000 of income per year. But their problem was going to be taxes because they didn't have a plan in place for how to minimize their tax burden over their lifetime. And by setting everything up the right way, Roth converting at the right times, doing it to the right tax brackets, and just looking at everything that we needed to look at tax-wise, we were able to show them how to save over $1 million in taxes over the course of their lifetime.
Wow.
Think about that. I mean, $1 million that they could spend extra during their retirement that they're not giving to Uncle Sam. And just being able to use that with their family. That's an incredible difference.
And what's more is we were able to show them by doing this tax planning, by doing the retirement planning for them, that she's not going to have to work until 65. Wow. That she's going to be able to retire at age 60. 5 years sooner and not have to work that extra 5 years. Nice. 5 more years that she gets to spend with her husband, with the grandkids, not having to worry about working 40 to 50 hours a week and just getting to enjoy their retirement together. And we showed while doing this, instead of $80,000 of income per year, you're actually going to be able to live on $100,000 of after-tax income each year for the rest of their lives. So retiring 5 years sooner and getting an extra $20,000 of after-tax income each and every year. Take the grandkids to Disney. Do the things that you want to do. Travel. See what you want to see, because you weren't able to do all this stuff while you were working. So enjoy it now in your retirement. And that's exactly what we were able to help them do. So if you are looking to retire and you don't know, are you able to retire at 65? Are you able to retire at 70? Are you able to retire sooner? What does it look like for you? You need to go to A Better Way betterwayfinancial.com and click on the sign up now button, and we'll be able to show you your options. How much income can you take if you retire sooner? How much income can you take if you retire later? What are some ways that we can save money for you in taxes? Again, that's going to betterwayfinancial.com and clicking on the sign up now button so we can have this conversation with you.
We also have links posted in the show notes. So if it's more convenient, just click there to go to the website, or again, visit us anytime at abetterwayfinancial.com.
Thanks for listening to A Better Way Financial, the podcast with Frank and Frankie Guida. To learn more, visit abetterwayfinancial.com and join the Guidas for the radio show, A Better Way Financial, Saturdays at noon and Sundays at 12:30 on News Radio 790 WAEB.
By contacting us, we'll review aspects of your retirement portfolio to include suggestions about how best to utilize estate, tax, and retirement planning strategies and other financial services, or if changing management styles is appropriate for your specific needs and objectives. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendations to buy or sell any financial vehicle. Past performance is not a guarantee of future results. Investments can fluctuate, and when redeemed may be worth more or less than when originally invested. A Better Way Financial is not affiliated with nor endorsed by the Social Security Administration or any other government agency. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company. Any client experiences discussed during this show are unique to that client, and they are not meant to imply or suggest you will experience the same results. Advisory services offered through A Better Way Financial. Insurance offered through licensed professionals at A Better Way Financial. Pennsylvania Insurance License number 301779.